Mutual fund cash holdings just hit 1.5% of total assets. That's not just a record low. That low is way below historical norms. Just a little perspective here. The cash level that used to be the bare minimum for decades, right? Fund managers, they have to keep some dry powder, and that cash level used to be about 4%. That was a low level of cash. We saw it several times in the 60s and 70s, even during the dot-com boom, even at the '07 highs. So even when fund managers were euphoric, piling everything they had into the market, that cash floor still hovered around 4%. It's important to understand how everything changed during this final leg up. Ever since the financial crisis, fund managers have again piled into shares to the point that cash levels have dwindled 62% below that 4% level that itself signaled some of the market's biggest tops. So notwithstanding any other analysis, our view is that the next bear market, whenever it arrives, will bring an equal and opposite reaction. It'll bring a disdain for equities and a corresponding movement into cash that breaks any of the old records. Incidentally, Warren Buffett, we think, is well out in front of this trend. Unsurprisingly, Berkshire holds record cash already, and fund managers, we think, will be playing catch up. If you want more insights like these, go to elliottwave.com. Manufacturing PMI, it's a good gauge of economic activity, and it's been in retreat 9 months now below that 50 level that signals a contraction. PMIs, however, they are just a survey-based economic indicators. What we want primarily are indicators that are derived from the market action itself. Take a look here at the black line, copper-gold ratio. It's market-based. Copper is a metal that is critical to economic activity. Gold is a metal that tends to reflect risk aversion. The ratio, therefore, does a pretty good job sussing out economic trends. And the recent action is noteworthy. Copper gold declined since April 2021. Manufacturing PMI initially follows copper gold. Then the economy goes sideways, even as copper gold continues lower. So we have copper underperforming relative to gold. The implication being that the economy is in worse shape than these lagging indicators would suggest. If you want to learn more about our approach, how we stay out in front of these trends, go to elliottwave.com.